A sure, short way to stimulate the economy is to encourage housing. It's one welfare measure that's not seen as a freebie, but a capex and consumption stimulant. It can encourage large sectors like cement, wood, furniture, ceramics, sanitary ware, consumer durables. Housing is also one of the most employment-intensive sectors. So obviously a favourite with all political parties. Currently, there are two major ways in which the government has approached housing. Home loans get a tax set-off on the principal and on the interest paid. Secondly, the government's PM Awas Yojana has helped construct 1.2 crore houses in urban areas and over 3 crores in rural areas through interest subsidies. While PMAY 1.0 officially ended in 2022, a PMAY 2.0 is widely expected in the budget. But how should it be redesigned? What else can the government do for housing? I have with me two stalwarts, Keki Mistry, former Vice Chairman and CEO of HDFC, and Mahesh Misra, the MD and CEO of India Mortgage Guarantee Corporation. Gentlemen, thank you very much for joining me in this all-important conversation. Mr. Mistry, first to you. We know the two schemes that are there. How can the government improve it or do more?
All right, so Latha, before I come to the scheme, I think it's important, you've already talked about the importance of housing. But in my view, the budget will revolve around 6 pillars, and one of those pillars will be job creation, and job creation will be facilitated by encouragement to the housing sector. So that's the background. Now, there are many things which could be done for the housing sector. The CLSS scheme, which came in about, I think, 2015 or 16, I think was a tremendous success. We as HDFC at that time were the largest lender under that program. It benefited number of people. You gave the statistics. I think something like that coming back to the system would be enormously beneficial. Some tweaking may need to be done. For example, the limits of the amount of the price of a house for which the benefit was available, that could be enhanced, because since then 5 or 6 years have passed by. That is certainly one change which could be made. Another change which could be made is cover a broader segment of places, a broader segments of towns and cities. In the last round, there were certain towns which did not get covered under the program. And therefore, consequently, people in those towns could not get that benefit. But something similar, I think, would be a phenomenal boost to the housing sector.
Okay, got that. I'll come back to you on the fact that, one of my friends did an RTI application and found that of the eligible houses, only about 27% got the CLSS benefit, or rather the PMAY benefit, in companies like yours, like HDFC, Mr. Mistry. But then banks did much worse, with SBI only getting 6% of their loans eligible for PMAY. So on that note, Mr. Misra, considering that for some reason not all eligible houses or not all low-cost houses are getting the PMAY benefit, what do you expect?
Yeah, so if you look at the government for the last 10 years, I think there has been considerable commitment towards the housing sector, be it, in fact, even during the third term, the first announcement that was made by the PM was on
that the PMAY will be extended.
Houses. If you look at the headline, our CAGR on GDP has been about 6.5% for the last 10 years. Housing has been more than double of that. So the headline would suggest that there is adequate impetus to the industry. But once you peel the onion, you realize that it's the greater than 50 lakh segment that's growing. The less than 30 lakhs have actually degrown. And today, in the sense that they were nearly 50% of the market, they're down to about 34% now. Okay. So clearly the focus is on growing premium housing. And when the government talks of housing, it actually talks of housing for all, which basically has an element of affordability. Now, there are 3 components to growing housing. There is demand, there is supply, and very importantly, there is access to finance. If you talk to leaders of public sector banks, for instance, they are very committed to financial inclusion. But top line, center of plate is Jan Dhan, center of plate is Mudra, PMAY is there, but perhaps
it's not mentioned, yes.
After the merger of HDFC, housing finance companies are just 19% of the market. So who really is going to lend to the affordable segments? Because 40% of the housing market is with government-owned banks, nearly 40% with private banks. The unit economics don't make sense. Therefore, what we would expect in this budget is some form of a NHB or NHB equivalent institution giving a low-cost refinance, far lower than what they are doing today, with the monitored end use. Okay. That could perhaps give some impetus for government and private bank lenders to lend.
Okay.
If you look at the industry, it's about 34 lakh crores. Only 16 HFCs have a balance sheet of greater than 10,000 crores. So really the scale has to come from the banking sector. A refinance is one. Second, we are reliably informed that the government in the PMAY version, whatever you want to call it,
2.2, okay.
They are actively contemplating a guarantee scheme as well. And we believe that will be an important market creator.
Okay, so that's two things. You're expecting a possible guarantee for the loans given, like the CGT, MSC types, and a possible low-cost loan refinance from NHB.
There will be a bunch of supply-side measures.
Okay.
I'm specifically focusing on my domain, which is access to finance.
Okay, I take your point. Mr. Mistry, your thoughts. Like I told you, this RTI application indicated that while HDFC is the best performer with 27% of the low-cost loans being PMAY loans or CLSS loans, for the banks, it is much lower. They don't seem to be that attracted to that product. Is there a unit economics problem? Spending so much money to do due diligence for a 15 lakh loan, is that something that needs to be overcome?
That can very easily be overcome. If HDFC could do it, why can't a bank do it? I don't think that's, in my view, a big challenge. I agree that some kind of guarantee given by the government for the loan in some form or the other would induce or would make it more encouraged or would make banks more inclined to do these kind of loans. But I just have one comment on the high end and the low end market. There was a mention that the growth in recent times has really been in the high end market and there's very little growth in the low end market. Now, you have to look at it in the context of the last 10 years or the last 8 years. So the period from 2016 to 2020 was a very stressful period for the real estate sector in the metros. And actually, you may have seen, and we used to talk about that, property prices would have declined during that period. So now suddenly when prices have gone up because demand has picked up and so much of construction is happening, it looks as if there's been a sudden spurt in house prices. But the reality is that if you take it over an 8-year time frame from say 15 to 24 or 16 to 24, you'll find that the growth has not been that abnormal.
Okay, fair point. But let me come to the other schemes, Mr. Mistry. Do you think that there is a likelihood of any tax concessions getting tweaked on the upside, of course?
I think so, Latha. In my view, there are 2-3 things which could be done for the housing sector. 3, there may be one more. First, of course, we talked about CLSS. Second thing would be the interest deduction on a house, on a self-occupied property, which is currently capped at 2 lakhs of rupees. That amount of 2 lakh needs to be enhanced because you have to adjust it to inflation. This 2 lakh was done several years ago. Since then, even if you take inflation at 4.5%, 5% over a period of 6-7 years, that 2 lakh should be a much higher number. So that is one concession. Second, I would say is we need to encourage rental income, or we need to encourage rental housing. If you see globally, rental housing is a huge, huge market. But in India, rental housing doesn't really exist. People want to buy a house. People don't generally want to stay in a house because nobody wants to buy a house with the idea of renting it out, generally speaking. And the reason for that is also that the rental yield on a residential property is typically 2 or 3%. Whereas the interest that you would pay on a loan that you've taken to buy that property would obviously be much higher. Let's, for argument's sake, say it's 9%. So you're paying 9%, you're earning 3%, you're incurring a 6% loss. Now that 6% loss should be allowed as a deduction when you calculate your taxable income. But the reality is that the tax deduction in respect of that loss is currently capped at only 2 lakhs of rupees. And then the balance is to be taken.
But if it is for rent, it is, if you give your house on rent, the entire EMI is allowed as tax set off, isn't it?
No, it's not. The interest is allowed as a deduction, but then if there is a loss under the head house property, that loss is not allowed as set off.
That's not set off. Okay. Your point taken. I'll try if I have time to come back to the PMAY. But Mr. Misra, what, according to you, could be this guarantee product? That looks
No, I think the contours are still being worked out. We as a private guarantee provider.
You are a guarantor. It will be a competition for you.
I would say it will more be a market maker than competition, as long as it's the same regulation. So as long as it's the same regulation, I think it will be a market maker more than competition, because today the value proposition is still being established. In any financial services product, the government has been the biggest market maker. But if I were to, Mr. Mistry talked about rental housing, but if I were to talk of home ownership, and if we just move away from affordable housing, today if you need to buy a 50 lakh home, the best case loan you can expect is 40 lakhs.
Yeah.
And therefore you need to, kind of provide for interiors, you need to provide for registration. Most people would then tend to go for unsecured loans or other riskier forms. Okay. So I think that's something which, again, the regulator or the ministry should look at, because that can give a massive impetus to housing in urban areas. These have not been kind of looked at for several years now.
Well, from the rumor mills only, entirely unconfirmed rumors, is that Mr. Mistry, instead of increasing the MIG housing from 6 to 18 lakh, from 12 to 18 lakh, what I heard, entirely unconfirmed rumors, is that the cap may actually be reduced so that actual affordability is achieved or better targeted. But Mr. Mistry, just a point, even on this affordability thing, you said that if HDFC is able to ensure that 27% of its eligible loans are under PMAY, why are the banks doing worse? But even 27% is not a very good record. Grio Finance, of course, which was, when it was under you, achieved 55%. But my point is, it is still not a very good number. Is it that what Mishra said, that the unit economics doing so much work for a small loan is something that is deterring inclusion?
See, Latha, over a period of time, these things become a routine. So when you say extra cost involved, I mean, we could operate with a cost income ratio of around 7%. So I cannot explain why a bank would have a significantly higher cost just for that. I don't think that's the reason. I think the reason is the risk, that the perception that for a 15 lakh rupee loan, where we are spreading out and going out of the, and giving it, and there's a risk involved. You're not sure about the titles of the property. There is enough lending available to you, so much other opportunities there. Everything is India is underpenetrated. Why go to that market? Let specialized lenders do so, and then you can buy back those loans under some kind of a loan assignment.
Fair point. Fair point. So perhaps for inclusion, as Mr. Mishra says, if a guarantee scheme is being thought of, perhaps it will be a sweetener. Likewise, a cheaper refinance from NHB could be a sweetener to make housing finance, especially for the affordable segment, a cornerstone of the upcoming budget. But let's see what we have. We should know in about 4 days' time. Thank you very much, Mr. Keki Mistry and Mahesh Misra, for joining us in this conversation and whetting our appetite as to what to expect from the budget. Wrap up on Bazaar on that note. Chartbusters coming up.